For those of you counting on the promise of no tax on tips and no tax on overtime and an expanded child tax credit, I have an update for you that you need to hear. The Senate has officially made some changes to the plan that was passed by the House in the big, beautiful bill. And the Senate changes will reduce those benefits and will put more limitations on who is qualified. So before I get into it, this is still not the end. There could still be more changes to this bill after Senate Republicans go through more negotiations. But according to the Senate Finance Committee's recently released tax section of the big, beautiful bill, here's what we know. Let's start with no tax on overtime. The Senate version says the same thing the House version does. This is a tax deduction. It will only be allowed from tax year 2025 through tax year 2028. The bill says you will not see tax-free overtime on your paycheck. Your overtime in your paycheck will be taxed. The way the Senate bill works is the same as the House version. At the end of the year, you will only be able to deduct qualified overtime on your taxes. Both the Senate version and the House version say you can only use this deduction on your taxes if you have a Social Security number. So if you use an ITIN number or any other number to pay taxes that's not a Social Security number, you do not qualify to deduct your overtime. Now, here's where things get different. In the Senate version, if you have a Social Security number, senators have put a cap on how much you can deduct of your qualified overtime, and they have changed who is eligible to deduct their overtime pay. According to the Senate bill text, you will only be allowed to deduct up to $12,500 for that taxable year if you are a single filer, and you will only be able to deduct up to $25,000 if you file a married joint return. The House version had no cap on how much of your qualified overtime you could deduct. The Senate version is also different in that it changes who is qualified to even deduct that up to $12,500 or $25,000. It says you will only qualify for that overtime deduction if you make less than $150,000 as a single filer or $300,000 if you are a married couple filing jointly. If you make more than that, the Senate bill says your overtime deduction would decrease by $100 for every $1,000 you make over the $150,000 or $300,000 limit. So for example, if your modified adjusted gross income is $151,000 a year as a single filer, you would only be able to deduct up to $12,400 of your overtime instead of $12,500. And then it goes down from there. Does that make sense? So now what qualifies as overtime? Well, that part is the same as it is in the House version. It says overtime is federally calculated at a minimum of 1.5 times a qualified employee's regular hourly rate for hours worked exceeding 40 hours in one work week. According to the Senate bill text, qualified OT includes overtime pay for all non-exempt employees as outlined in the Fair Labor Standards Act of 1938. Bottom line, if you are getting overtime now, you probably already know who you are. That would continue under this bill. The bill does not add any new categories of workers who would be eligible for overtime. Now let's talk about no tax on tips. Again, parts of the Senate version are the same as the House version. First, you must still claim the tips on your taxes as income. And then, according to the bill, if you qualify and if the tip qualifies, you can deduct it. But again, only through tax year 2025 through tax year 2028. The tips are only qualified if, 1, you have a Social Security number, 2, you work in an industry that normally receives tips like a restaurant server or a food delivery driver or a nail tech or a hairstylist. Like, you can't be a teacher and deduct your tips. The tip is only qualified if 3, it is paid voluntarily without any consequences if your customer doesn't pay it. So if you're in a service industry that normally receives tips, you can't force people to tip you and then deduct those tips. The Senate version makes it clear that cash tips, tips received through credit cards, and tips received from other employees under a tip sharing agreement do qualify. But here's where things change. In the Senate version of the bill, it caps the amount of tips that you can deduct from your taxes. It says you can only deduct up to $25,000 in that taxable year for your tips. The House version had no limit. The Senate version also says you can only qualify to deduct that $25,000 in tips if, again, You make less than $150,000 as a single filer or $300,000 if you are a married couple filing jointly. Again, if you make more than that, the bill text says your tip deduction would decrease by $100 for every $1,000 over the $150,000 or $300,000 income limit. Lastly, the child tax credit is different in the Senate version of the Big Beautiful Bill than it is in the House version. The Senate version says the child tax credit will increase for children and parents who qualify to $2,200. Under the current law, it's $2,000. But that $2,200 is less than the $2,500 for the child tax credit as it's written in the House version. But in the Senate version, that $2,200 child tax credit is permanent. The House version ends that $2,500 child tax credit in 2028. Now, if you have kids and you normally take the child tax credit, the other change that you should be aware of that appears in both the House and the Senate version is you will now only be able to claim the child tax credit if you have a social security number. So this bill says even if your children have social security numbers, if you as the parent have an ITIN number or any other number other than a social security number, you will not qualify for the child tax credit, even if your kids have social security numbers. Neither bill changes the ages of kids who are eligible for the credit, nor do either of the bills change the income thresholds for parents to qualify. Now, I know that's a lot of information, but I wanted to be as detailed as possible because I know how important this is to a lot of you. So if you want to read this new tax bill text, I'm going to email it out to you in my Facts HQ email, so make sure you sign yourself up.